What's going on, guys? Welcome back to another video. All right, so before we get started, smash the like button, smash the subscribe button, and share this far and wide. All right, so today we're going to speak about indicators, what they are, and how you can incorporate them into your trading. Give me a second, let me take a seat, and let's get professional. Okay, so I'm not going to sit here and read the Google definition of what an indicator is, and I'm not going to dive into the scientific approach and formula that was created to derive and generate this indicator that you see on the chart. We're going to simplify it in the simplest form possible and just speak about it in general. Now, before we do that, my opinion on indicators is I wouldn't solely rely on an indicator to base entries, exits, and trades. Okay, if you're going to use indicators, I would personally use them as confluence. Now, I'll talk a bit about that later on, where we'll cover it on a chart. But let's quickly, paint a little picture or create a model to give you a better understanding of what an indicator is and how is an indicator derived. So if we look at an indicator in general, you've got raw price action, raw price data in a live market. You've got a formula and you've got an output. That output is the indicator that you see on your chart. So now, if for argument's sake, we say that price takes about 5 minutes to run through that formula before you get that output or before you get that indicator on your chart. You've got to remember that price in real time still moves. So that raw price action still prints. And while you're waiting for that indicator to be displayed, price is still moving. So if we use the example of that formula taking 5 minutes, that is why you get late entries, early exits, late exits, early entries, okay? Because by the time that indicator has been printed or is displayed on the chart, you've lost that 5 minutes of raw price data. So to sum it up, an indicator is a lag in price, right? But let's have a look at it on the chart. We'll dive into it in a bit more detail, and we'll see how at the end of the day, that indicator just comes down to horizontal levels, critical zones, once again, support, resistance, supply, demand, okay? And in this instance, we'll have a look at a fib retracement tool. We'll have a look at moving averages, and we'll dissect those and see how it actually just comes down to those horizontal levels. So there's no need for them, but if you want to use them for that extra confluence, then there's nothing wrong with doing so. But let's get into a chart. All right, so let's start with a moving average. Now, we've just got a basic moving average here on the chart on pound dollar. We're now currently looking at the 30-minute time frame. Now, what a moving average tells us is, or what it shows us is momentum and trend. So it's pretty simple. Price trading above the moving average, and we've got bullish momentum or a bullish trend. Price trading below the moving average, and we've got a bearish trend or bearish momentum. Now, with that being said, all right, that's the crux of it in general. Now, you'll see there are instances where price gets below the moving average, which might signify a shift in momentum or shift or change in trend. And you'll see now when we break it down how that gives you false signals, right? And that's why it's so important to look past the moving average or this specific indicator and just trade horizontal levels. And we'll also talk about and cover how this moving average or how this indicator ties in with those horizontal levels. So now, obviously, looking at the lower time frames, you'll have multiple breaks of that moving average where price gets below the moving average, where you think that we could possibly see a shift in that intraday momentum or that market structure or trend. But if you look at that same area of price on the higher time frames, you would see that it doesn't quite get below the higher time or the moving average on the higher time frame. So there already there's conflict of interest, and that alone, before we've even dissected this moving average or this indicator, that alone shows where or how there are faults in this, and how basing entries and basing trades on this alone could lead to, a lot of unnecessary losses.
So let's just quickly look at it on the 30-minute for the time being. Now, just like I said, breaking down, price above the moving average, we've got bullish momentum. It's clear over there, okay? And then obviously, price trading below the moving average, we've got bearish momentum. And then obviously a break of that moving average and we get the shift. But that's not always the case, okay? So now if we have a look at just quickly how this moving average and how this indicator once again just ties into horizontal levels being critical support, critical resistance, supply, demand, however you want to look at it. So we'll just quickly plot our levels here. And before we do that, I think many traders trade, moving average touches. So if price is holding above the moving average, they are of the opinion that, we've got that intraday or intra-week, whatever it is, bullish momentum. So as soon as price touches that moving average, you buy, okay, and vice versa. Now, let's see how that works and what it comes down to at the end of the day. So let's have a look at this section over here quickly. And here, agree 100%. You'll see that price is trading above the moving average, which shows us that we have bullish momentum. But now you've got to keep the following in mind. Although it's clear here, so for instance, let's have a look at this, the touch and the rejection of this moving average at this price point here. Now, we don't know that for certain while price is moving here. We'll only see that this, that price has indeed reacted and rejected and bounced off of this moving average once price is up here, okay? Because remember what I said, there is a lag, an indicator is a lag in price. So by the time this candle's closed, then you'll only see that price has bounced off of that moving average, which means, well, there you have a late entry, okay? And you've lost out on quite a bit of movement. So if we look at how we can combat that and how we can actually get entry earlier based off of simple price action and structure using the moving average as confluence rather than as, basing entry off of, let's look at our horizontal levels. Now, you'll see that that is a resistance. Price has rejected that price point. We are holding above the moving average over there, which shows us that we do have momentum, bullish momentum, buyers are in control. But now if we look at, pure price action and market structure in line with momentum, trading with momentum, we need to wait for price to break above this level here to then, give us a fresh level of support. So we break the resistance, a fresh level of support forms, which means we're looking at the retest, confirmation on the retest to then continue buying. Okay, so we would have been able to get entry based off of pure price action and market structure. We would have been able to get an entry down here based on the lower time frames, whether it be confirmation on the 1 minute, 5 minute, 15 minutes, and we would have got entry down here, and we would have taken profit up here, being the next zone. All right. Now, looking at that, as opposed to getting entry only after you've seen price bounce off of this moving average when it closes over here, you'll see that just looking at this time frame in specific, you've already lost, call it 15 pips. Okay, so there's your late entry. But just quickly looking at this moving average, you'll see that that moving average where price bounces off the moving average, all it is a critical support. It's a support zone. Okay. And there you have it down here as well. You'll see, looking at most recent structure, we've got a support zone over there. Price bounces off the moving average there, which is just a bounce and retest of the support based off of recent structure. Okay. And now that is just how simple it is. Now, if we have a look at it over here as well, and we just look at where price tapped and bounced off of the moving average here, all that was a retest of this critical zone over there. You'll see we broke above the critical zone, which would have been a critical zone on the hour or the 4 hour with that momentum, retest to continue bullish. And only after price closed up here would you have seen it bounced and touched the moving average, which means you would have entered up here somewhere while you had waited for that moving average to print. Whereas based off of pure price action and market structure, we would have got entry down here on the lower time frame, because all that is a break of a critical resistance, retest, rejection of the zone to continue with momentum. So that is how you would use your moving average as confluence. Okay, and you can clearly see how this moving average just ties in with your critical or your horizontal zones. Let's have a look at the hourly quickly and see if it holds true here. Okay, and there you go. So you'll see how this holds true. Here, price reacts or rejects or bounces off the moving average, which you only would have seen up here because you would have needed this candle to close before that indicator or the moving average would have printed at this price level. But now looking at it without the indicator or without the moving average, all that is a break of a critical horizontal, a retest, rejection to continue pushing through the critical range into the target zone, which sits up here, which is a horizontal level. And then same thing over there, right? We break and we pull back, higher time frame retest, bounce off of the moving average to continue again. Now, a lot of individuals, a lot of traders would have seen, well, you know, price is actually getting below the moving average over here, which means we should see a shift in momentum or shift in trend. Now, you need to look further than that. Price is still holding above this support, this critical support. Although it's below the moving average, it's still holding above this critical support zone, which means we're still bullish and buying is still on the cards. Only if we get below this critical support do we then have that shift. So there already you'll see a flaw in that moving average, or basing trades off of that moving average, right? So just see how that ties into your horizontal zones. That is why these indicators, these moving averages are useless. Now, if you want to incorporate them, just use them to identify momentum and trend. As simple as that. Now let's have a look at the fib retracement tool. Now, before we go into that and before we dissect this on a chart, let's not dive into too much detail because the history and whatever behind the fib is irrelevant. Okay, you don't need to know that. But what you do need to know about a fib retracement is that there are 3 levels of importance. Okay, the 61.8, the 50, and the 38.2. Those are the significant fib retracement levels, okay, of which many traders blindly buy or sell off of once price, taps one of those levels. So if we backtrack and, we plot the fib retracement tool onto the chart and we dissect the chart and actually have a look at what these levels, correlate to, you'll see that once again, just like anything else, it comes down to horizontal critical zones being support resistance, supply demand. So we'll have a look at this here on pound dollar, the hourly chart. Now here we've got the uptrend. Okay, so if we have a look at the fib retracement tool and we use that while we are bullish, we plot that from swing low to swing high. Okay, which means it starts here. That's where you start your fib retracement tool and you bring it up to there. Now, I'll do that in a minute, but let's quickly have a look at just simple structure, price action, market structure, horizontal levels, okay, on a naked chart. Let's plot our zones quickly. Now, having a look to the left-hand side and having a look at here, so we're going to work with this price action here, the structure over here. Now, you would have seen that looking at a support region, resistance region, we would have had one in this region here, okay? Now, if you drop down to the lower time frames, be it the 30-minute, the 15-minute, you would have seen how price had created a nice resistance zone up here in that downtrend while we were bearish. Okay, so essentially we would have retested to continue pushing bearish. However, price broke back above that zone, which now becomes a support region. Not only that, but price obviously reacted at a critical daily zone, which was this over here, okay, pushing into this wick low. So if that's not too clear and we drag this level to the left-hand side, you would have seen how that holds as a zone, okay, be it a support, be it a resistance, depending on which way we're looking at price. Now, here price had rejected this price zone here, and looking at that, price had rejected that level, it had rejected that level. And if you do go further back, you'll see how it was a level, prior to this date here. So let's go back to this region here. Let's remap that out. And now just looking at general structure, we obviously had broken this bearish market structure. Okay, so we had a shift in momentum. Now, be it on the hourly time frame, we had a break and we had a push into this next zone, which means that we would see a pullback, a higher time frame retest of this zone here, because remember on the hourly we had the immediate break and push, so we need price to revisit that level to grab liquidity, which then we get the higher time frame retest. We then monitor price within this region here, and we wait for lower time frame confirmation, where we can then start looking at probable buys after that shift in higher time frame momentum. So essentially what we are looking at is we are looking at this here, break, retest to continue back into equal highs over there. Now, just looking at that level, keeping this level in mind, and now plotting our fib retracement. Now, remember I said to you a fib retracement, we are looking at a 61.8, a 50, and 38.2 as critical or significant levels on the fib retracement tool. So plotting the fib, we start over there and we join it to that swing high over there. Now look where price pulls back into. Okay, it pulls back into the 61.8 level on the fib retracement tool. Now, yes, traders would blindly buy because we've had the pullback into that level, but price does not have to react and reject that level to continue bullish. Remember, price has a mind of its own and can do whatever it wants to do. So we need to wait for lower time frame confirmation. We need to wait for signs that price will in fact reject that level to continue bullish. So don't just blindly buy in the 61.8. But at the end of the day, the point I'm making is you can see how that 61.8, which was one of the 3 significant levels on this fib retracement tool, all that is a critical support. It's a horizontal level. Okay, so let's have a look at another example. Let's have a look at this here. So we'll look at it in a downtrend now. So what I need to do here is I need to quickly find that. So there you go. So in a downtrend, we are going to look at it from this swing high to swing low, which is over there. Okay, so now looking at this, which is plotted from that point there, we have now had that shift in momentum, and here we had that swing low. So we had plotted the fib retracement to that region, and we are now waiting for a pullback to look at getting involved again. Now we've pulled back into 38.2, which once again, one of the 3 significant fib retracement levels. And we've then rejected the 38.2 and we've continued bearish with that intraday momentum, right? But at the end of the day, all that 38.2 is a critical resistance. And there you see our price rejects that level. We then retest to continue, and we then break below that structural point or below that support level. We see the pullback. We now need to wait for lower time frame confirmation within this pullback for price to tell us that it is in fact going to continue bearish, and it continues bearish. but look how it rejects the 38.2. So once again, all this needs to be used as is confluence, okay? You don't blindly buy at 38.2 or sell rather, you don't blindly sell at 38.2. It's important to wait for price to tell us that it's going to turn at that level. Now that's the point I'm making. And now you've seen it, that this fib retracement tool, the moving average, all those two come down to at the end of the day is horizontal levels, support, resistance, supply, demand. So that goes for all indicators and, you know, all chart patterns, which we'll cover in another breakdown. But there is the point proven. So why complicate your chart? Why create a mess and look at multiple different things where all you need to really focus on is simple structure? Because at the end of the day, without structure, without those horizontal levels, these indicators won't exist, right? Anyway, I hope that was a useful and somewhat eye-opening video. Let me know what you think in the comment section below, and I will catch you in the next one.